Hello, this is Tyler Shanelli with Option Trading Coach, and I'm back with the Power of Leaps Part 2. 10 years ago, I embarked on this journey of being an online educator, and I created a video called The Power of Leaps that got a lot of traction. A lot of people resonated with this strategy of buying long-term options, my specialties. Really a strategy that, I've put a lot of time and effort in learning, and we've had a lot of success, allocating. So this video, lots happened the last 10 years. I had an investment firm. I got my Series 65 license. My dad, who I learned the business with, passed away a few years ago. And just so much has happened. So many huge wins and pretty large losses too. Trading through a pandemic. And now as we're coming out into a new election cycle and there's change in leadership, there's so many opportunities. We have AI, we have quantum computing, we have different commodity and energy trends that are taking shape. And I just want you to be prepared. And that's what this can do. This video is going to show you how you can take your hard-earned capital and allocate it into strategies that can give you exponentially higher returns. So if you haven't seen one of my first videos back in 2014 on Netflix, how I turned 13 or 15,000 into 130, this is happening again and again and again. And this video is going to show you exactly what I'm talking about. So let's go ahead and dive into some examples and let's take this to the top. Hello and welcome into the Power of Leaps Part 2. Unlocking your potential as a Leaps trader and reviewing some real trades for insights and reflection. So this is a missed opportunity actually for a 20x return on ARM Holdings, ticker ARM. So the opening trade was, the stock was around 55. It IPO'd in September of 2023 around the 60-ish price range. And I entered into a position on September 18th for a 40 contract trade size at 13,350. I have a 50% stop on this trade, which you'll see here is 100% invalidated because of this scenario. The closing trade overview, stock was at 52.38, so about 2 months of very weak and slightly bearish price action. The exit date was on 11/14/2023 for the full trade size of 40 contracts. Ended up losing 50% of the investment on this for a 50% loss. A very painful trade because, as you're going to see here in a second, it totally took off in the months after I took it off. Okay, so now I'm in the actual account where this trade was executed, and I want to just give you my fully transparent log here. So I have the ticker ARM listed, and you can see the dates are specified enough to keep it focused. Couple of canceled orders here, and then you can see I have all my order executions on the open side, buy to opens. They're in blocks. And one thing, a big tip for you is if you're going to be trading leaps and you want to feel out the market, is instead of sending your full lot on the rip, go ahead and just inch your way into it. So I'm testing the market to see where I can get filled at. And as you can see, I got 5 at 330. I got some at 320. I got a couple more down here at 350. So let me expand this out now. It's a little complex. You can see the fees and the commissions as well. And then we can see here 320. And then we can see down here buy to open at 3. These were canceled though. So these were canceled orders. Let's see what this one is. I bought 5 here at $3, canceled, didn't get filled. So I'm testing the market if I can get filled at $3, and then I'm testing at 310. Both of these were not successful. So that's giving you the overview. If I simplify this a little bit and just do executed, this will give you the actual price. And yep, so you can see here, bought 5 at, and this is like a lot of times when you have leaps that are new, the bid-ask spreads could be a little wide and you may not get filled right away. If you want to get filled at mid-price, which is that's getting the theoretical price, that's where you don't want to buy more than the theoretical price because that means you're paying too much. And this is showing you the different execution prices: 370, 340, 330, 320. So as you can see, as I'm inching into this and building into a position all in the same day, but I'm able to get different prices. So on the 40 contracts, I was able to save about 35 cents, so a little over $1,000 because I scaled into it. So that's a big tip for you that I want you to know. Another tip is, having other underlying positions to anchor a LEAPS trade. So I had some shares with it, and those shares, you can see we're up here closed out the whole trade. Why did I close out the whole trade? I got sick of it. And I got a little impatient. So one of my biggest lessons, which happened again, sadly, this late in the game, is you got to be patient. This is a game of patience, investing and trading. So this is the ticker symbol on ARM Holdings. I'm looking at the daily chart right here, and I'm also going to make this so you can see a little clearer. But this is the trend here that we have. You can see we're looking 2023. My execution was right on this day, right here, the third candle. And then you can see it traded slightly down to where, exit date around November 14th, it's kind of the same price. But because of that 2 months of poor price action and consolidation lower, the option premiums got chopped up. And the implied volatility probably came down quite a bit from when I got into when they were taken out. But as you can see, this thing totally took off. And one of the other things that I would say is another tip is if you can scale out and get some of your investment back heading into an earnings, that's definitely recommended. You can see what happened on this earnings. Sometimes you have to be patient. You might not hit it out of the gate. I mean, this is a good example, but it doesn't always look like this. To be honest with you, this is a good example, but this is also a good example of sometimes it being a less likely outcome. You're not going to see a 40% gap up on earnings. But that's what happened, and that's what's possible. So this is why you have to be aware of this. This is the current option chain on ARM Holdings. So this contract that you saw just got filled back here for $3.70 to $3.20, average price of $3.34, heading into expiration Friday, almost a year and a half later. This is the beauty of time and bringing this full circle. You can see there's 2 days till expiration here. These 90 strike calls are mid price is $5,600, $5,650, over $250,000. The other thing I want to show you is the price of the underlying option. So if we look at this option symbol over the last, let's just do 2 years, and we'll do weekly candles so you can see. So this is the first 2 months of it when I didn't have a lot of success. I didn't have a lot of positive price action. Then you can see this underlying contract traded up to over $100, over $10,000 a contract. So this position of $13,500 traded up to over $400,000 in July of 2024. After that big earnings beat in February of 2024, just a few months into the position, it traded up to over $300,000. So next big tip is, do you have, and not everyone does, and this is always this is a trained ability to have the emotional wherewithal and the stomach to adhere to these fluctuations. This is a big fluctuation. Looking at this is important that you see this. So you're in the trade at 13,000. Heading into February earnings, the trade is worth about 50 grand because the options are worth 1,300 a contract. And if you didn't scale out heading in, which you may have, it depends if you size for max loss or not. These contracts are worth nearly 50 grand. And then it goes from 50 grand the next day to 200,000. And then the day after that, it probably trades up to maybe 225. And then the third day after, or the second day after earnings, these contracts are worth over $300,000. And then it comes from $300,000 2 months later to being worth $80,000. So can you stomach a $200,000 drawdown? And that's a question that you have to ask yourself. And a lot of people would probably say no, and that's fine because I would probably fit in that quadrant depending on how things are going for a given month. But that's okay because I have strategies I can show you on how to mitigate that through income production and through good profit-taking strategies. And then you can see it went from 2,000 a contract. You see my price over here on the side. This is the price of the contract. To $20 up to 100. So that's showing 80,000 to 400,000 over a 3-month stretch, May, June, and July. But the takeaway is 2 days till expiration. These contracts have 1,300 open interest. If I didn't do anything, they'd be worth $250,000. And what I've learned as my last takeaway for you is when you're right on a LEAPS trade and you have the patience and the wherewithal and the conviction to stick through and hold to expiration, it's okay if you scale out and get your investment back or partial of your investment back. But there is so much power in exercising your LEAPS. And that's what I'm going to show you how to do inside the LEAPS letter. So if you want to learn more about LEAPS and how you can understand this and implement it, then come trade with us. I have a membership community here at LEAPS Letter. Okay, so you just saw a pretty sad trade example here on ARM Holdings from 2023 that should have been held till now when I'm shooting this. But let's take a step back for a second. Let's pause. Number one, what are you doing now, T? Because I have a trade on that we're going to talk about. It's 2025. And this Power of LEAPS Part 2, guess what? We're going to have parts of this indefinitely. We're going to have Part 3, Part 4, Part 5. But this Part 2, it's important you understand this is the current time frame. I'm shooting this 2023, 2024, 2025, with options out to 2027. The first part was really my career that started really after the Great Recession, 2009 through 2015 timeframe. So a little bit of gap there. A lot's happened from 2015 to 2025, but I want to focus on the present. So what happened so far this year? January 2025, I put on, it might have been December of 24, but I put on a pretty large trade on Quantumscape. So that's a live trade that I still have on in full disclosure. But I've been managing this, and it's been working decently in the first few weeks. So let's talk about that now. I can't leave you in the Power of LEAPS Part 2 with a missed opportunity from last year. I got to show you something that's live and that we can review together now. So this is the order book on Quantumscape, which is a stock I used to trade during the pandemic. There's a few stock positions in here, but this is the order book on this security. And you can see back in December 19th, 2024, I started building a position on this name. You can see I purchased 50 contracts, another 50, another 50. So the same thing that I've been talking about is scaling into these leaps. This is showing you how I did it. And recently, that's a really smart way to facilitate your orders and to test the market and not get too heavy out of the gate, because you could get it at a cheaper price. As you can see here, that was a little bit more cheaper there, cheaper there. Anyways, this is my fill log here. So when I show you this overview, the stock price was at $5.10 when this was put on, which was 2 days, December 19th and December 20th. The trade size total on all of those order book was 225 contracts. The trade cost was right around $31,000 or $1.40 a contract. And I didn't have a stop loss on this, so I'm sizing for max loss. The expiration date, as you can see here, is January 15th, 2027. These are some of my sell orders that you're going to see here now. So the sell orders was partial. I closed 40% of the position approximately 2 weeks after it was established. It went from $5.10 to a range between $5.90 and $6.90 on the stock. And these were the dates that I closed it out. So the first fill was, scaling out a little bit just to get a little bit back. Because you want to think as your dollars, your trade dollars, is you're sending out soldiers into the market and you want to bring back as many as possible. And, you don't want those soldiers to die. So you have to protect them. You have to bring them back so you can put them back to work on another trade. So these were the 3 different dates that these were scaled out of. And on the 26th of December 2024, I sold just 25 contracts, which is about 10% of the position. And then the 65 contracts were sold between January 3rd and January 6th. So this resulted in about an $18,600 credit, which results, if you average all these out, because there's a lot of different fill prices, you can see sold to close here at $1.60, which was the lowest. So I got in at $1.40, $1.60. That's a small trim. And then $1.85, $1.85, $1.88, $1.90, $1.81, $1.86, $1.92, $2.40, $2.40 again. These are larger contracts, as you can see the quantity here. These were 15 at $2.24, $2.32, and then $2.38. So this is a trade that I still have on. I don't want you to think that, and this is not an endorsement to buy the security. Everyone's different. I don't know what your situation is. I'm currently holding 135 contracts. The contract price has come down, since I started to sell this in the beginning of 2025. The contract price is a little higher than my entry, but I was able to scale out, realize about a 50% gain on these 40% of the trade that I scaled out of, and this value now has come down from 31,000 to 21,000, but I'm still in the trade, and there still has a lot of room to go. So before I close this out, I had to give you at least one example of it working and showing you live, real time, as I'm still in the position, how I'm managing it. So let's take one look at the chart here. So this is the chart of the option that is showing the Quantumscape $12 strike, January 2027 call options that have a lot of time to go before they expire. You can see that the options came out in the middle of September of 2024. So they've been out for about 5 or 6 months. You can see the high of the contract was 318. The low was about 98 cents. This is showing my underlying position of I'm long shares, so I anchor my LEAPS trades with shares. That's something that I've previously mentioned and that I will continue to reaffirm to you because it's important. It's important to have something that doesn't expire. It's important to own shares, and that's something that I will continually reinforce as you hear more about these trades and as you hear about LEAPS opportunities from me. So this is showing you where I got in, right around $1.40 a share, which was around this date. And then the options trade up to a high of 260. And you can see just a couple of days how much they move. So this is the volatility aspect of these options is you got to be able to stomach pretty large losses. This gain on this position, I would have given most of that back because you can see if after this was the day that they were closed out, 5, 6, 7 trading days after, and it's almost back to where I entered down here at 140. So it's important to let your trades run and let them work and let them, blossom. But it's also important to get some of your investment back because you can never go broke taking profits, but you can never get really wealthy by taking your trades off too soon. So there's a fine balance between taking off open positions in a profit and letting them run to infinity, because that's what's possible. There's the sky's the limit in this business. So this is what I got for you. Let's go ahead and show you one final reference point. So that chart you were just looking at, that was the option contract chart. This is the underlying stock chart. So this is showing you what price has done on Quantumscape over the last several years. If we zoom out here, we can zoom out. You can see it IPO'd back in 2020. Trade up to a high of 132 during the 2021 bubble, the everything bubble. And then you can see it's been consolidating for 2.5, 3 years almost. However, I will say that this is a violent name. Violent meaning you have these gaps that are pretty significant, these large bodies. You can see it goes to the downside too. I feel like that support level is relatively stable and solidified here around $4 to $5 a share, showing you this triple bottom here that's been depicted. But when I got in this position, it was on December 19th, which is this date right here where my cursor is, right around $5.10 a share, $5.10. And then it traded up. First sale was on December 26th, which was around $6 a share. $6.10 was the high of the day, just about. And then it kind of pulled back, and then it traded up to a high of about $6.95 to $6.80. I sold 65 contracts in this time frame on January 6th, which was, in hindsight, was a smart move because 1, 2, 3, 4, 5, 7 trading days later, and it's almost back to my original entry. So now I can start to think if it comes back even lower and retests this support, I may be very inclined to add back into this position. And that's what you can do when you take profits. I'm not saying sell your whole position. You could do that, but it's smart to take profits and let these things continue to work. And this is what we're going to talk more about here. So you're in the right place. I'm your guy with LEAPS, and I'm looking forward to continue helping you succeed in the stock market trading LEAPS. Okay, I have one more trade to share with you to close out the Power of LEAPS Part 2, and this was on Rivian. I bought the December 2026 35 strike calls. The stock price, when I initiated this position, it was scaled into around $10 to $10.35 per share was the stock price. My entry dates were 4 different dates, the 10/14, 10/21, and then 10/30/24, and then October 31st, 24. Total trade size was 200 contracts for a total investment of right under $30,000 or $1.42 per contract. There was no stop loss on this because, as we've learned, that's been invalidated from the ARM trade example that was missed out. I will say that this was down about $8,000 in the first week or two, which I want to talk about here shortly. The closing trade overview, since this was a relatively short trade for a LEAPS opportunity, the stock popped about, $4 or $5, around $14 and $16 was my range of exiting. I got out on 12/26/24, and then the beginning of 2025 on the 3rd and 6th of January. I exited this through 28 separate exit orders, which is a little excessive, but shows you that, sometimes you scale out of this in small increments, and that's just part of the game. You want to extract as much profit as you can when things are working for you. So the total credit, or my price per contract, averaged out to be $2.38 per contract, or about a $47,000 credit. This resulted in a realized gain of $19,253, or 68%. Now, I will say, as a full disclosure, I'm currently holding 25 contracts, but not of the December 2026 35 calls. I've modified my strike down, and I've bought the January 2027 25 strike calls. So this is roughly a $7,000 trade. My average cost basis is right under $3, and that's just to kind of give you a snapshot. I did have this trade that's separate, that's been totally closed out for this gain. And these are all my overviews, and I want to talk through all the actual fills. So this is showing you the option chart of this specific contract. When I got in around October 15th, you can see it was about $1.30 to a high of $1.50 a contract in this range. And then what I was saying, it was down $8,000. That was in the first half of November. It traded down to about $1.10 per contract. So if my cost basis was $1.40 and I had 200 contracts, that's about a $7,000, $8,000 drawdown in here. It came back pretty quick, and as you can see, this fluctuation, these changes are part of the game. Now, I exported my fills to give you the overview, and this is a little bit extreme with all my pricing, but this is all my entries. And you can see I got 50 contracts at $1.55, and you can just kind of scale down to where I averaged this all to kind of keep it simple, $1.41, really $1.42 per contract. So that was my total investment, and it happened over all of these orders. I think it was about 18 orders in that October 2024 timeframe. The stock price fluctuated but in the low 10s, 10 to 10.50 was the range. But you can see that I scaled into this to where I was able to bring down my cost basis by about 10%, which I think is significant, because if I went full size on day one, I would have, I would have spent more money. And then scaling into that, that's a good takeaway, is that you can save yourself. And this is a trend that you're going to see time and time again, especially inside my membership community at the LEAPS letter, because this is a really smart way to build positions, is scaling and pyramiding into them. So this is the sells. So this is showing you a lot of different sale prices that are, 10 contracts, 10, and then this is a smaller increment, but they can see at the end of all of this, the 81-day duration is exact from the last sale, which was at 20 contracts at 289. So you can see, and some of this is cut off, I apologize, but you can see that, you're not always going to get it perfect. Like I scaled out of this pretty early for not that much of a profit, but still you want to get that capital back, especially when you see other things manifesting where you can redeploy. And that's what I did here. But at the end of the day, the total credit on this was $47,637, or about $2.38 per contract, resulting in a 67% gain over 81 days, which is relatively significant. And as you can see now, when I'm shooting this, we've had a pullback. So again, hindsight is 20/20, but also, this happens, I would say 50% of the time, where you can get the opportunity to get back into a position close to your entry price just off of normal fluctuations. So normal fluctuations looking like this, this is where I got into the entry. Points 1 and 2 are these flags here when the stock was around $10, $10.50 a share. And you can see it spiked up pretty significantly here within the first couple weeks. And then we had a big sell-off. So a lot of this is news driven. And, as things change on the legislative side, the regulatory side, with things that could impact the name, that's certainly a factor. Also outside investments from other companies. There's so many news events that could influence the stock. But this is showing you the visual representation of where I trimmed my my position. Here, 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 and here. And the dates of this was, this was in December, and then this is the beginning of January. This is the final sale. And I didn't get it perfectly, but it was around $16 a share, as you can see here. These are all the filled orders, just to kind of give you a full transparency. And that's what we have here on Rivian. So I am back in Rivian. Again, 25 contracts on the January 2027, 25 strike calls. I may add to this. I may modify it. But that's all what you're going to learn about inside the LEAPS letter. So there you have it. That concludes the Power of LEAPS Part 2. If you want to learn more and take this to the next level, head over to leapsletter.com. That's where we do this on a continual basis, always looking at opportunities and showing you what I have as open positions. Thank you. I appreciate you. If you haven't done so already, make sure you like, subscribe, and share this video. I appreciate you, and I'll see you on the next one. Take care.